Alright, I'm going to do this video now because I think it's a good time to. It's late here, but it gives me a nice opportunity to speak through just a basic introduction to Renko. This is something that I've got as former content, but I think it could do with a refresh or certainly a condensing down, so I'm going to attempt to do that now and deliver something that is cleaner and easier to intake. And again, we're going to continue with the kind of introduction theme right now. You know, I'm new at the Haven. I think it's important that you understand the basics of the way that I trade and the things that I use in order to facilitate my trading. So we're going to start off with Renko. So we've covered a little bit of RSI, and I want to introduce you to something else that is, you know, more important to me than anything else that I trade. Probably more so than divergences and candlestick charts. Renko is my go-to, always has been, and it's not something I speak about a lot publicly because typically it creates more questions than anything else, which is just a pain to try and answer. But obviously here we can take all the questions we want. So what you're seeing at the moment is kind of a typical scalping setup for me. And just looking at BTC here, three different charts. None of these are using time. All of these are simply using price moved. So all of these charts here, none of this is related in any way to time. It's only to do with price movement. And actually this isn't what we're going to cover off, so it's super unhelpful for me to even have that loaded. What we're going to take a look at is Renko on TradingView, and this is where the majority of you are going to start off your journey and your experimentation with Renko. So we're going to kick off there and go through some basic concepts for Renko. I'm going to hide all the indicators. I'm going to get rid of everything here just so we can keep it nice and clean, and we'll start off with a fresh chart as well with BTC, and we can discuss, you know, what this looks like. So what you're seeing on here is Renko. This is what Renko looks like. Renko is a replacement for candlesticks. Okay, it's an alternative for candlestick trading, and as you can see, we have something that looks very different to candlesticks. Now what you have on here are called bricks. Right? We refer to each of these Renko prints as bricks. Some people call them blocks. I've always called them bricks. So what we talk about is Renko bricks. And you can see here under this color scheme, let's just change it just to make things easier. We change the up bars to green and then change the down bars to red. All right. So what we're seeing here is green bars are price moving up, red bars are price moving down. Now what Renko is at its heart is a trend following strategy. That's what Renko is at its very core. It is a trend following strategy. So the very simplistic thing that we would look at is we would say you get long when Renko is green and you get short when Renko is red. And that's a very basic way of looking at Renko. So it's a little bit like Heiken Ashi. They're very good trend following methods for candlestick charts. And so Renko is along those lines. Right? It simplifies the trend. Now the advantage of Renko, and what you can quite clearly see from this, if we compare it into, you know, BTC over here. You know, what time frame we got here? 4 hour. Okay, so obviously what you can see on Renko is a far simpler picture than this. We have a simplification of price. Very, very simple price action represented here. Very complex wiki price action represented here. So Renko is a trend following tool that essentially tries to simplify price action as much as possible while still leaving relevant amounts of data in. There are two forms of Renko that you can use on TradingView. So if you just double click on your Renko bricks, you'll have access to the settings for Renko. This box assignment method is what you need to look at. What you have here is ATR, or you have traditional. ATR is primarily used when you are trying to follow trends. So ATR is essentially a look back method that takes the average amount of price moved over the period, the length that we define, and it prints based on that. Okay, it prints these bricks. So what we can see here is that the standard ATR length is 14. You never need to change that. You can leave that as standard. So we're looking at a 14 period look back, and we're using ATR. So what it does is Renko looks back over the last 14 bricks, says what was the average price moved for that region, and if that's say $300, then what it will do is automatically assign all of these bricks to have a $300 ATR length. Now what this means is that, and this is another term that you'll hear with Renko, is that charts repaint. So what we mean by repaint is if the ATR value of the last 14 days is 300, then everything's going to be set to 300. Now if the period over, the next 14 days or the day after changes the average and makes it 500, then it will repaint every single brick into a 500 brick. So it will shift the entire view based on what it sees over the look back period. And as that number fluctuates, your chart will look different. Major drawdown, major issue with Renko. There's no getting away from it. It's a pain in the ass and it shouldn't happen, but it does in TradingView. It should happen under ATR because it's technically what ATR is designed to do. Now, what that doesn't do is it doesn't take away from how effective Renko is at still assessing trends. Okay, because it's still very effective at that. It doesn't take anything away from that scenario. It's very effective at trends. The other option that we have is traditional. And what traditional does is very simply is it assigns a box size. Now your box size, you're going to select yourself. So let's start off with 150 and see what happens to the chart. So you can automatically see tons more data. Right? Tons more data now. Because what's happening is we're not simplifying the process. We're now looking at every time Bitcoin moves $150 in one direction or another. So that's what this box size is representing. The box size is the total dollar value moved of the market you're looking at. So if I want to see one Renko brick for every $50, then I enter 50. Okay, now I can see every $50 price movement of BTC. If I want to zoom things out a little, I decide, well, actually 300 is a nice number for me. Now I can see every $300 price movement. So what this is doing, what traditional is doing, is giving you a better view of the price action. Because it's allowing you to dive deeper, it's allowing you to customize that number, and it's allowing you to find a setting that you think works for you. Now, you'll notice the way I'm saying the figure that works for you, and I'm not really being specific about what I use. And the reason is I don't use TradingView primarily when I use traditional markets. When I'm using, traditional Renko settings, I use Sierra charts, and that's something we'll come on to later. The other reason is that it's entirely dependent on you and how you trade. I've got people that I've worked with previously that use incredibly small traditional box sizing, because they want minute micro scalping action. I've got other people that prefer to look at a pure price action chart using Renko, but still prefer to use bigger numbers to get a zoomed out picture. So it depends entirely on you and how you want to trade. Right? That's the key to this. It's about you. So what have we learned so far? Renko is a trend tool. It's used to determine very easily and simply the direction the market is moving, up or down. Renko is designed to strip out the noise and give you a simple price overview of whatever market you're looking at. There are two options on TradingView. You've got ATR, which is primarily used for trending markets, and for markets that are, clearly up or down, to allow you to stay in the trend for as long as possible. ATR charts will repaint, which means they will change based on the value that ATR produces. The other setting is traditional. Traditional is where you assign a dollar value to your box size or your brick size, and that's what you use to create the chart. So that's our overview. Now what we've got on Renko, what are the advantages of using Renko, aside from trend following and cleaner price action? Renko is incredibly good at mapping support and resistance levels. Alright, Renko is very, very good at mapping support and resistance levels, and the reason it's so good is because it makes them very, very clear. So it makes support and resistance very clear to visualize. So we can see up at the top on BTC here. You can just see through this level here. That kind of 58, 59,000 level. Very clear resistance. Right, 1, 2, 3, 4 touches here. So very clear resistance. And we can see it down here as well. You can see our resistance level at 39,000, the spike above here to clear out the stops, and then the rejection again. We can see our support down here at 35,000. Very, very clear at mapping out support and resistance levels, because Renko just visualizes it essentially like a line chart. So it makes it a little bit easier to spot these things. The other thing that Renko does very, very well is allows you to track market structure. So like we looked at for BTC. Market structure here of our low, our high, higher low, higher high, higher low, higher high. Break in market structure, lower low, lower high, lower low. Right, so we can easily see these changes in market structure. There's a saying that I use pretty regularly with Renko, which is Renko never lies. Right, there's no ambiguity on this. It's simple. It's just a set of bricks. Right? If the bricks have broken market structure, it's not bullshitting you. It's not a wick. You don't have to worry about does that wick mean anything? Is that significant? Is that a break? Is it not? Right? It's broken. And this here was the key for me shorting this region. Absolute key for me, because this structure break here was so significant to us. As soon as you took the low here, we changed market structure. We've done 50% of the work needed, and we hit this high. Resistance clearly on Renko as well. Easy short. Okay, so very clear. Support and resistance levels and market structure. Very, very clear. The other thing that Renko does, which we'll see if we can, we can't see anything on there, is it maps divergences very well. And we'll come on this a little bit later when we look at this setup in more detail. But it tracks divergences very, very well. We primarily use the awesome oscillator and not RSI when it comes to Renko. And again, we'll cover the reasons for that. One thing to cover as well is you'll notice that I was clicking across the time frames, but I've also been saying Renko doesn't really care about time. Now, while that's true in Sierra, and I'm using pure price movement, that's different in TradingView. And so let me just expand on how TradingView uses time when it comes to Renko, and why it's one of the downsides of TradingView and Renko. So if we'll switch this back to ATR. We'll eliminate all of our data again, get it back to a very simplistic overview. But again, look at the resistance levels printed in here at 58,000. Look at the market structure break printed here on this low. Just very clean again. So what we've got with time frames is, if you're using ATR, TradingView will look back on whatever time frame you have selected and obviously work out the ATR value for that particular time frame. So if we're looking down at the 5 minute, then all of this ATR look back period will be governed by average price movement, in this 14 period look back. All right, that's what we're looking at here. If we take the 15 minute, we're going to be looking back at the 15 minute ATR. So we're going to be looking at these 14 bricks. If we go to the hourly, same again. Right, so TradingView utilizes time frames for Renko in a way that when we're using ATR, it figures out the ATR value from the time frame that we're looking at. What traditional does If we change this to traditional, we'll go to 300. Is what traditional does is it says, we've got 300, remember, is our value here for traditional. And so what traditional is saying is it's saying, in order for me, TradingView, to print a brick, to paint one of these bricks onto the chart, you need to move that value of $300 within the time frame that is selected. So in order to print a brick, let's say we want to see BTC paint a green brick, what it has to do is it has to move over $300 in the 15-minute time frame. If we change this to the 5-minute, it's going to do exactly the same on the 5-minute chart. So now you're going to have to print $300 of upside movement to get a green brick within 5 minutes. If we change it to the 1 minute, it's going to do exactly the same. Now what you'll see is that 1 minute, 5 minute, and 15-minute isn't too different. You see the way that this chart barely changes. Here, you just look at this cluster of lows. Right, just watch this. Barely any change. Right, the only thing you'll notice is that the actual aspect just condenses. The reason being, $300 in a minute is quite hard. It's pretty hard to achieve. So during the big pumps, we might get that. So again, that's where we figure out playing with the number, depending on the time frame we'd like to use. So when we talk about time being irrelevant for Renko, it really is. Like, it genuinely is irrelevant. However, TradingView has a formula for the way it works out certain aspects of Renko chart production using time. So we have to be aware of it. Now, one of the other things to cover off that I should have covered off earlier, but I'll do it now, because of course you've hung around till this point, so we'll keep going, is if you look at the current price action, which is here, you'll notice this small red brick starting to appear. We refer to these as ghost bricks. Ghost bricks are bricks that are looking to print, but have not printed yet. So what this is giving us is this is showing us the price of BTC, currently 35,285. And we know BTC is moving to the downside, but we know that it has not yet hit the criteria to print a brick. So we refer to it as a ghost brick. So we can see that BTC is trying to paint a red brick here. It's trying to put in a red brick, but it's currently unable to do that. Oh, and not enough price actions developed. Okay. So we refer to these as ghost bricks. Now these can happen to the upside as well. Let's see if we can find a market that has some green. Try one of the indexes. The NAS. You got any green for me? No. Silver. So one thing you're going to have here is obviously I'm using traditional, which is now going to mess up my no, you're not going to do it. Gold, silver, surely. Gold? Okay, so we can see the little pop-up here on gold. So this is an example of a green ghost brick. We know that prices on gold trying to move higher, and we're seeing that green brick develop. Okay. So, introduction to Renko. It's a very different style. It's very good at keeping you in trades. If you can learn to master Renko, it is very good at keeping you in position. It simplifies price action. It allows you to focus on the true underlying trend without distraction from wicks, choppy price action, because it just eliminates it. If you think about the way that we use that traditional setting, when we're talking about BTC and we say, okay, look, I want $300 brick sizes. If BTC chops around, Renko doesn't do anything, because it's not fulfilled the criteria in order to print bricks. So Renko doesn't do anything, which is a great thing, because it stops you getting chopped up as much. Because if there's no actionable signals, because Renko's not moving enough, there's not enough bricks being printed, there's nothing to trade. So it helps to keep you out of the chop. We'll come on to some aggressive strategies later on. 2 values, ATR and traditional. You need to figure out what works best for you. That's not for me to tell you. ATR, very good for trend following. Traditional, very good for scalping or getting a slightly more detailed but still clean view of the price action. So a couple of things to keep in mind that you're going to need to kind of work on. The values you use, ATR, you always use the default value of 14, same as the RSI. Traditional, you play around with it. You determine what you want that to be. Don't be scared to mess, right? It's a sandbox. You do whatever you want. If you want to put a traditional value in there of 38, go for it. Like, no one's here to tell you that that's an incorrect number. If you get good results using a number like 38, 53, 76, whatever it is, whatever works for you. Okay? It's not for anybody to tell you that. And that's our introduction, and that's your base knowledge of Renko built up. In the next videos, we'll start to cover a little bit more about strategy and some of the indicators that go hand in hand with Renko, some of the things that work very nicely when paired with Renko, like a fine wine. So we're going to cover that off next, and we'll make sure that you continue to build and develop. But I hope this has given you a small insight into Renko and how we can use it, what it's particularly good at and what it's not so good at. It's important to appreciate that there are some downsides to using Renko. It's not all sunshine and rainbows. There are downsides to it as well. We have to be aware of that. So I hope this video has given you a good taster, and I hope that it starts to get you thinking about Renko as a potential charting option for you. And I'll catch you guys on the next one.